Hey, everyone, here at the Investing Stuff You Should Know podcast, where we bring you expert insights into the world of investing and beyond. My name is Johnny Nelson, your host, and today we're thrilled to have Elijah Brown as our special guest. Elijah, thanks for being with us today.
Thanks so much for having me on, Johnny. I'm looking forward to our chat.
Amazing, man. Elijah we speak to all kinds of investors and syndicators. I know it's kind of a fancy word for some in the audience, but we talk to a lot of people doing from flipping a doghouse to investing in really, really large commercial properties. Oftentimes multifamily apartments here. Elijah has kind of niched down into a specific spot. Basically, he raises capital for operators, really top performing operators around the country. But before we get into that, Elijah, share with the audience a little bit of your background. I know you you spent time in the Army or you're currently in the Army, and give us a little background there about where you grew up, what you're doing, and kind of what led to this path.
So I never thought that I would be in the Army growing up. Actually, I arrived at school. I went to the University of Southern California, and I got there and I thought that my parents were going to help with the tuition. And I came to find out, rudely that was not the case at all. And so I got the $30,000 bill for the first semester and was like, what do I do? So actually my sister recommended that I check out the ROTC department. It's the Reserve Officer Training Corps. And this is essentially a program that's open to almost anyone with a pulse, where you can essentially trade time and service with the military, in exchange for college tuition. So I marched down to that office and they wrote me a check for my full tuition. And I said, great, sign me up. Ended up with an 8-year contract from that. And I've served the entire time of that contract in the reserves. So I never actually went on active duty. It's all been the 1 weekend a month plus, 2 weeks in the summer doing training. I'm actually leaving for that in a few weeks. So that's the extent of the military. They paid for school so that I was able to essentially not have any debt, which was great. But back to my story with real estate. I originally thought I was going to go into banking. I was going through like investment banking recruitment pipelines through the school and everything. Ended up getting lucky and finding a summer internship with a hedge fund, and quickly realized that I was not interested in that space.
To pause right there, Elijah.
Sure.
When you say not interested in that space, like we know this, like that's like a lot of stuff.
Yeah.
There's like culture, like the office, like the career trajectory. What part of that was not appealing, or did you not see alignment internally into your life?
Trading public equities and stuff like that is a very high stress environment. And the part I didn't like was how many variables are involved. With real estate, we're looking at maybe 20 or 30 variables, with maybe like 4 or 5 of them being really like lever movers, needle movers. Whereas like when you're picking, equities and trading stocks and stuff, there could be thousands of reasons why the deal fails. And so the risk adjusted returns within real estate are just a lot better. And so, I found myself migrating more towards that because I have more of a risk adverse type of strategy. So I was watching a lot of YouTube videos while I was in college. Started watching channels like Bigger Pockets, Chris Crone, Phil Pustajovsky, Graham Stephan, a few of these, early real estate YouTubers. And I realized that was really the best way that I was going to be able to grow my wealth. It's not, a get rich quick overnight type of thing. I realized it was going to be a more longer term strategy. And I got really excited, decided to buy my first single family rental property. I was living in Los Angeles and realized that I could not afford anything there. And so I convinced my best friend and my cousin to go in with me on this cheap little $140,000 house in Orlando, Florida. And this was back in 2017. And we got that deal done. We put a tenant in, and then we did that a bunch more times before scaling into the multifamily.
Amazing, man. Amazing. Just again to lay out the color of the kind of guests we bring on, and just because it's a unique part of your life, I believe you're also currently living in a Sprinter van. So is it true that you still never actually bought your own single family home, and then you're kind of
that's not true, actually?
Oh no, okay, sorry.
So
Correct me. Get me wrong. Get me right.
Right out of school, I ended up. So I never wanted to work for money. So I ended up getting a job at a real estate fund because I wanted to learn. And so I found this REIT, large REIT in California, ended up working there for 4 years. And after a few of those years, I decided to buy a house. And this was when everybody started freaking out from COVID in 2020. And I went in and got a really good discount on a house that had a tax lien on it, and renovated it. And I ended up selling it last year. And then, we moved into the van full time, and we've just been traveling ever since.
Amazing, man. Yeah. What and what part of that life? So my wife and I bought I know it's a little bit of a tangent here, but there's, as far as like asset classes, people are looking more in alternative spaces. So yes, there's a traditional existing apartments or new apartments in development. There's ADUs. I know there's some recent laws passed in California, especially that's kind of taking people by storm. And RVs, we know there's hundreds of thousands of RVs that have been sold. And of course, RV parks is another investment class. So, I mean, you and I are both, you're full-time. We just bought an RV, like I said, last year. So that's something we're doing more of. And a lot of people are doing more of. What, what is that, what has that life been like? And do you see, like, what do you see that trajectory of that RV or the kind of that digital nomad life going for yourself?
So this would never have been possible without Starlink satellite.
Sure.
So, even just 2 years ago, we would not have been able to do this.
Okay, so that we have like this, we have this
Yeah,
converging technology, like a lot of things, like the
yeah,
internet or vaccines or the IC chip,
right.
something like that. And like that, the existence or the development of those things, and they matured far enough along, allow this other kind of lifestyle or this other like population,
Yeah.
emergence to explode.
We call that location freedom. So it's
Yeah,
like we can literally be anywhere we want and
yeah,
still run our businesses, just as fast, just as well. And so what's really nice about this lifestyle is being able to essentially park the van off grid in the wilderness somewhere where there's no one else, and you wake up in the morning and you throw the back doors open, and it's just like expansive views of mountains and lakes, and it's
I
very nice.
love
And
that.
then I pop my laptop open and I can send out a deal email. So it's it's a good balance. It allows me to like be out on these trips for a lot longer periods of time. But the lifestyle is not without setbacks. There are a lot of challenges. We lose half a day to a day every single week taking care of like maintenance items like emptying water tanks, filling water tanks, getting fuel, cleaning, just all kinds of different tasks you got to do to maintain the lifestyle, moving around, finding new places to sleep. And so it's not easy. I'd say the most difficult part is that my partner and I, my girlfriend, we both run businesses out of the van. And so
That's
we
amazing.
can't all we can't both be on phone calls at the same time.
Right.
And there's only a few comfortable spaces to really work in there. We have our passenger suite seat that swivels around and like a table pops up, and then we
Yeah.
have
Yeah.
like the desk area in the back that converts into our bed, and it's not the most comfortable thing. And so that's a bit of a struggle, but we realized that we had to make certain sacrifices to be able to have the lifestyle.
Yeah, man. Thank you for sharing that. I really do feel like I find it interesting, fascinating. I think others would find that interesting and fascinating as well. Of how an actual couple is making this work and doing that. And like there's some trades and sacrifices. There's pros and cons. So we know that. We'll get into the what you kind of focus on now is in a very professional high growth sense. In raising funds for large sponsors, Elijah. But give us the challenges as you kind of went from yes, college from college, and then kind of stepped into a couple of different roles. Give us the what was the down point? What was the low point? And did you think you're going to make it? Was there struggles there? And yes, you haven't been doing it for like 20 years, but every entrepreneur and person, anyone venturing into that space, experiences those challenges. Can you give us a couple of stories there?
Every single deal I have done, but by the way, I did the first 6 years as like an active operator of these properties,
Yeah.
like finding the properties, managing the contractors and the property managers, finding the debt and the equity in the whole 9 yards. And every single deal had these massive hurdles that I had to overcome. It was definitely not the passive investment that I thought it was going to be. And just an example, on the first sixplex that I did, so I did 4 single families first, and then I convinced my coworkers to invest alongside me in a sixplex deal in Orlando. And I only had to raise $112,000 for this deal, and it was just everything went wrong. The inspection was bad. There was foundational issues. I had to negotiate credits, and the seller was not having it, so I had to go meet up with him a few times, and then I came up $20,000 short on the raise, which was just like devastating because I was
Yes.
calling literally everyone I knew, and it was only like $112,000, which is
Yeah.
nothing.
But then
So
like
I
but that
had,
the percentage of that, like it's all about just a ratio of the money. So like whether you're
yeah,
raising like 20 million and you're like, a
right,
million short,
right,
or whether it's 100,000 and you're like,
yeah,
1,000 short, it's like that's still not going to work, right? Like we still need that, whatever
yep.
that is, right?
Meanwhile, earnest money had gone hard, and I had pledged
Oh man,
additional earnest
wow,
money. So yeah, so what I ended up doing was I got an in-person meeting with the seller, who happened to be in California for that week because he was at a seminar or something, and I convinced him to seller finance me the last $20,000,
amazing,
and we
wow.
figured out how to get the deal done. We closed on the property, and then obviously there was a million other issues after that. Just dealing with like, we went through 3 property managers on that property within 3 years. The contractor was horrible. Every little thing went wrong. We had flooding. It was just like a horrible property. But we ended up managing through it. The market was kind to us, and we got out of that with like a 60% IRR over those 3 years, which was incredible. Allowed me to make my first promote check as the sponsor, and
Yeah.
also reinvest all those investors' money into another deal. So that was a pretty awesome experience, but definitely like something I wouldn't wish upon anyone who's wants to maintain their sanity. So what I tell people is like, yes, you can make, like, I probably made over 100% return. I probably made 200% return on my money just by doing that deal. But the amount of time and headaches and stress and gray hairs that it gave me was just like outrageous. It was like a full-time job. And so I honestly would have rather just had my capital invested passively with one of these large sponsors and made my 20, 30%, or in Rise 48's case, a 70% average IRR within a year and a half, and not do any of the work. So it's
That's it. That's such a
yeah.
beautiful segue, Elijah, right there. That's this kind of this crux. But I want to just linger, if you would, just a little bit more on that. What do you think from what the investors you've seen that have gone full time into the real estate space? So there's the ones that start out, or maybe they've been professional and they have, a highly paid professional, and then they're like, hey, let's just take, here's 20,000 or 50 or 100, just invest this for me, and that's super clean. There's others that, because they're ambitious and they hear about it, real estate, or maybe they're even doing some themselves, they're like, oh, I want to do a little bit more myself. And then there's people that are straddling the line, and then there's others that like leave the professional space and go full time into the real estate space. Professional meaning like bankers, lawyers, doctors, engineers,
Right.
whatever that is, stepping in. And so there's like these different categories of people. How do you know what just for this is actually a real question, because people, I have students and whatnot that come to me like, so how do I decide if this is right for me? What have you seen to guide people, whether it's full-time real estate or they should just do passive? What's some tips or some guidance that you've seen over the years interacting with other investors or professionals that stay just want to passively invest?
Having been the guy that started active, I would say no matter what, for everyone, like, start off with a small passive position to learn how it works, what to do. Because when you have no experience and you're just getting started, going out and spearheading your own active deal, especially in a market like this, is risky. It's very risky, and you're going to have a ton of roadblocks. You might as well just partner with someone or watch someone do it the first time around so that you can learn. I'd say there's a lot of people who get into this space and they think, oh, I can like triple or quadruple my returns by just being an active operator or even a fund of funds manager.
Right.
And they don't really realize what it takes to get that business off the ground. I mean, like, I've got 7 years of track record with 12 full cycle deals, and I'm still in like an early growth stage of like getting to a point where I can consistently raise a certain amount of money every month. It's like most people who get in 95% of them end up, stopping within 6 months. And the other group, they're raising maybe like $100,000 or $200,000 a year, and it's just not enough to provide any kind of income. So um, for most people, I'd say just like stay out of it. Let the professionals deal with it, the people who already have the experience track record. And if you're extremely ambitious and you really want to go for it and you have the time to do it, which is rare, then start by partnering with people so that you can learn the ropes.
I love that, man. Thank you for that. Just your perspective on that. And it's very, it's very unique how people see themselves, what they see themselves doing or want to do, or they want to grow into. But also we both have gone down this road. It is extremely time consuming.
Yeah.
It can be very rewarding, but also like, is that cost, like some people just like need to get it out of their system, and they have to like go through like that cycle of doing a flip or
Right.
that, what turn or that deep turn, and then come on the other side like, holy crap, like that, like I never want to do that again. Or
Right.
I've yet to meet someone that says that lifestyle is so me, I want to do that again and again and again. So just, I guess, just kind of
If you're an active operator, you have to be a masochist. Like you have to love the struggle and the pain of it, because it's going to be constant struggle, pain, and surprises that almost ruin you every single day.
Absolutely, man. So now that's, like I said, that was really long, like kind of like a detour, but it's still kind of hovering around that transition of, the very active investor, hands-on. It's your own, mainly you're leading the deal, to then this other methodology where you're focused on raising capital from fellow investors. You're performing a lot of the due diligence, finding, amazing deals, amazing sponsors, making sure that all that squares up, and then presenting that to your investors. Tell us what that life looks like now, and how does that kind of typically work and go? How would someone participate, and how would they
Yeah.
find out? Just give us some insight there.
So, I had all those deals go full cycle within the last few years, and that really made me start thinking about like, where do I want to spend my time? What do I want to do? Part of that was like, I wanted to go travel and live out of a van. And so, my business had to become more passive, but
Yeah,
also I wanted to be more passive for my own lifestyle and for my own freedom. And so I became an expert passive investor. And I realized that I could juice my returns as a passive investor if I write much larger checks to these sponsors. And let me explain how that works. Essentially, I'll get together with my friends, family, investors, whoever, and we'll all pool our capital in a completely separate LLC. We call this fund of funds. So it's a completely separate LLC, and then we'll take that money and we'll write $1 million to $3 million check to a sponsor who is putting a deal together, and we'll say, in exchange for writing a large check, I'm not going to be okay with your 50-50 profit split or your 70-30. I want an 80-20 or 90-10. I want to keep 80 or 90% of the profits at the end of the deal, because I'm writing this large check. And most of the time, the sponsors will either have a separate share class that allows you to do that, or they will negotiate with you to give you those terms. And so, I can go from only keeping 50% of the profit as a passive investor to keeping like 80 to 90% of the profit. Meanwhile, I can also charge fees to those investors in my fund as well. And so that allows me to be, both a passive investor and also juice my returns as a passive investor by allowing other people in on my special negotiation. I will have to say, it's funny because I go from working, extremely hard within the active real estate business to now it's like, it's very little real estate, and it's more like sales, marketing, and investor relations, because my whole business is generating leads of potential investors, nurturing those leads, educating them, showing them what I do, and then, presenting them with opportunities and coaching them. And it's pretty much the same as what you do. It's a lot of investor relations, sales, and marketing, and very little active property management. And so it's definitely for me, I like it a lot better, but it's still a full-time job.
yeah. I would like to add to that, Elijah. This is my own bias, because we like people like ourselves, but there is something unique about guys like ourselves. that have gone through the trenches and have bought properties, managed properties, turned properties. They could be single family, smaller multifamily, it doesn't really matter because there's a lot of the basics are the same. And you
Sure.
build from that. And that really, there's other people out there that they have just perhaps raised money and they don't know intimately how to manage property, how to, screen
Right.
tenants, how to run a CapEx, like a rehab project. There is something very, very deep and a very solid knowledge base that guys like us build from. And then yes, there is a transition into presenting opportunities and managing that piece as a full-time business. But also there's this background information of a deep foundation of knowledge of how the back end, the actual operations work, which is so important because if you have a bad operator,
Yeah.
you will lose, you as a fund manager or a capital raiser will lose investors' money.
Absolutely. Couldn't agree more with that. It's I think there are two things that that kind of helps me with my ability to raise capital. It's one, it's that fairly large track record of all those full cycle deals that I was actively managing. So like I have that experience just like you were talking about. But also I came from the corporate world. I spent 4 years working for a large real estate fund, being an analyst, calculating, cash flows, underwriting, presenting to investment committees, doing the whole corporate thing, which I think is extremely valuable. I'd recommend for anyone who's looking to get into the space, like go find a job for a little while with an established company so that you can learn what you need to do to be, professional and present opportunities. It's just jumping in, going to a $30,000 course, that's not really going to be enough. You need to be doing deals at a high level to gain that experience.
I love that, man. I love that. So yeah, as we kind of turn, as we kind of turn the last into the last chapter here, where do you see yourself going with kind of with your Goldhawk Capital, and
Sure.
what kind of investors is a good profile for you, and maybe even speaks about like three things here, and then speak to also like the unique personalities or profiles of investors that are attracted to you, because the people that are attracted to you might not be the people that are attracted to me. And that's what actually makes this kind of special and fun is like, hey, this is how I think, this is my philosophy, how to preserve capital, grow capital, and my own, just who I am. Those things attract certain kinds of investors. So if you could you speak to that,
Right.
please?
Yeah, so right now, Goldhawk Capital. So we've always been multifamily people. We're focused on the value add, large multifamily deals, so 100+ units in Phoenix and Dallas right now. Properties that have a value add component. That means that we can go in and increase the income through renovations and management and things like that, so that we can essentially double the value of the property within a 2 to 5 year period. So we're very focused on those types of opportunities. And our goal is to be able to bring one of those opportunities to our investors every single month and raise a consistent amount of capital. I think right now for my 1 year goal, I'd like to be raising 2 million a month, maybe even 3 million a month for these opportunities. And I would like to essentially hone down on maybe 3 or 4 sponsors, and that's it. Because once you dial in and you find a sponsor that works really well for you and they're
Yeah.
performing, like just hit it over and over and over again. It's like you've found the opportunity, use it. Once you get too spread out with like 8 or 9, 10 different operators, that's a lot of data and due diligence to track. And so it's much easier to just focus in terms of who we're looking for. So obviously, real estate investors are a special breed. We're way more risk averse. We're more conservative. But we also, we realize that the risk adjusted returns are just a lot better than in the stock market. We tend to not like the options available to us in retirement counts and in secondary, public markets. And we realize that real estate offers a ton of tax benefits. We can use leverage. There's just a lot of things that are built into multifamily transactions that just make it way better. I Going back to the discussion about why I didn't want to work in the hedge fund space, why I like went to multifamily. It's like, I understand it. It's such a simple investment. I can literally put my hand on the wall of the building and
Yes.
know it's not going to disappear. It's like, it's insane. And so, we're looking for people who, have a more conservative risk tolerance. They're probably, within their, late 30s to early 60s.
Yeah.
They're earning a significant income at their job, so that they have enough cash or net worth to be able to invest in a lot of these deals. And then, just generally, since I have great networks from my school that I went to and the military and the various jobs that I had, I like to connect, first with those people. And then I also get a lot of referral from current investors.
Amazing, man. Amazing here. What's for the final chunk here of the show? What is one of your favorite books that you've read, or what's on your table side right now near your bed? If, presuming we have a bed,
Leadership
if you have a
strategy
table
and
side.
tactics. Yeah. So
Winter
I'm
man.
reading leadership strategy and tactics from Jocko Willink.
Oh, that's a good
That's a
book.
good
That's
book.
amazing. Yeah.
I'm in the army, so it's the language, speaks to me more. It's essentially, how to, be a leader and approach situations and motivate people to do things for you. And so that's important. What I'm trying to do in my business is be less of like the doer and the implementer and more of the visionary. Like
Yeah.
I am really good at pulling different people together and getting, motivating them to accomplish tasks. And I think that's what I need to be doing rather than, drafting all the emails and crunching the numbers in the Excel model and responding to the questions. Like I need to be bringing in the right people to do those things so that I can focus on actually growing the business.
Awesome, man. What's the best way for people to get in contact with you?
Definitely add me on LinkedIn. So linkedin.com/in/Elijah W. Brown. I post 3 to 4 times a week, and I usually have a link that will either provide you with some type of, ebook or free educational thing, or just access to my list so that you can start receiving deals. You can also check us out on our website, goldhawk.us, and you can find out more about us there.
Amazing. Well, everyone, thanks for listening to another episode of the Investing Stuff You Should Know podcast. We are delighted and privileged to bring people like Elijah Brown on and share his knowledge and the things he's doing. So until next time, give the show a like, spread the word, and so long.